Wall Street getting more bearish on Tesla after a rough start to the second quarter. A number of analysts cut their price targets this week after the company reported disappointing first quarter delivery numbers. Guggenheim reiterated its sell rating and lowered the price target on the stock to $122 from the previous $132. Let's bring in Ronald Jewsikow, who is the Guggenheim Securities Director of Automotive Equity Research, to discuss more. Ronald, take us into your thesis here. I mean, you're looking at a few things. The delivery downside in this quarter, saying it's a function of demand and not supply here. What is the demand profile that you're seeing in this environment, as a lot of customers seem to be wavering here on their purchase intent?
Absolutely. I would say mostly a function of demand. There obviously were supply issues, we think, on the Model 3 in the U.S., but most of the downside this quarter relative to both year over year and the fourth quarter of last year was driven by demand. We think U.S. volumes were down something in the range of 20 to 25%. We don't get that number in the release, but we're able to back into it from other regional data. And I think, understandably, it was a very messy first quarter. U.S. EV demand slowing. China competition is quite strong, both BYD, Xiaomi, Huawei, which operates through the Ito brand. But and then Europe really hasn't grown for 5 quarters now for Tesla. So I think structurally there are kind of emerging risks in all 3 regions that, even as we move beyond what is a very, very messy first quarter, I think, earnings result, there's reason to be concerned kind of for the structural midterm and long term.
Ronald, given the structural risk that you just laid out, specifically what we're seeing play out in China right now, obviously the price war is going on, increased competition. Now we have Xiaomi entering the race as well. What is your outlook for Tesla in China at this point?
Yeah, we struggle to forecast growth this year in terms of units. I would say at a high level, BYD entering the market, let's say 2 years ago, in terms of meaningful volumes, that has been an issue for Tesla in terms of trading down. Now what you have is much more competition directly with Tesla's Model 3 and Model Y in China, both from Huawei, who operates under the Ito brand. They sold nearly as many SUVs as Tesla sold Model Ys in China in the first quarter at very similar prices. And now you referenced the Xiaomi car. I think if you compare specs and price point for Xiaomi's SU7 vehicle that just launched in China, I think that's going to be a serious competitive threat to the Model 3. And obviously, as we look beyond this quarter and this year, Xiaomi's not going to stop with just a Model 3 competitor. They will eventually launch an SUV. And they view this market as kind of tangential for them to their broader consumer electronics business. So it is almost a loss leader product on the front end, which is tougher competitively, I think, for Tesla.
Ronald, if we find ourselves in maybe an EV winter here, and I'm kind of using the analogy of what a lot of crypto people think about as well. If we find ourselves in an EV winter, does that mean Tesla, other automakers say, you know what, we spend further to build out what is going to be the future 5-10 years from now? And I'm thinking specifically about this multi-billion-dollar EV factory in India that Tesla is thinking about, and apparently trying to kick the tires on where they could potentially break ground there. Can that offset, or is this a new era of investment that they initiate in order to just get ahead of that next cycle of demand?
Yeah, it's a good question. I think for Tesla specifically, a little surprised by the India factory kind of rumors, for lack of a better term. Once Giga Mexico is built, Tesla's supply is already outpacing demand. I think once you add Giga Mexico onto that, the supply is still going to exceed demand. So I'm not really sure why Tesla needs another factory in the near or medium term. I guess if this is a very long-term initiative, then that makes sense. But I would be personally, I think, surprised by anything in the near term about a factory in India actually becoming more concrete.
Ronald, what's it going to take for the pendulum to swing back in favor of Tesla and the other EV automakers?
Yeah, I mean, the biggest near-term risk we've highlighted to our bear thesis, so that would be an upside risk, is the FSD trial that Tesla has announced. I think there's the potential, particularly for narratives, to run away from themselves, to get away from themselves, and to have volumes, take rates for FSD to expand post the trial period. What we have messaged is that even if take rates do expand for FSD, it's likely to be very modest. It's a $200 connected service. Historically, connected services in automotive do not sell very well. And Tesla themselves has said monthly payments are an issue to electric vehicle adoption currently. If we were to take them at their word for that, that is the primary bottleneck, adding another $200 on the cost of a vehicle every month would seem to be prohibitive. So I don't think we're going to see meaningful take rates for FSD in the near term.